that. Kunal, what's the view firstly, very good morning. Great having you here. What's the view with regard to the index today, and what's the likely move?
So, good morning. The view again for this week, entire week, should be, I think, that the markets could remain more sideways. Now, I'd share a very interesting data point, which I saw yesterday on closing basis. When the index closed yesterday just about the 24,000 mark, we were at a point when there was a huge build-up at the 24,000 put and the 24,200 strike. In many cases, I think it was 100 strike also. So, we were largely stuck into this 100 or 200 point band for the Nifty. Now, there are two important, weekly expiries. One, the next week expiry, and then the monthly expiry for the month of July. For the next week expiry, there are two, data points. The put-call ratio is below 1. So that tells you that the market mood could be a little somber, going into this remainder of this week and the start of the next week, going into the weekly expiry on 21st of July. The built-up on the open interest is at 24,000 and the 24,200 strikes for the index, which means we may assume that the markets can probably trend to this 200-point band for the next couple of days for this week. But the more interesting data point happens on the 28th of July, which is the monthly expiry, where the stronger build-up is at 24,000 put. That tells you that it's a strong support. But the resistance comes at 24,500 mark for the index. So which means that traders are expecting that going into the final week for the series or on the monthly expiry is where we may expect the breakout to happen for the indices. And this week so far could be more like a version of what we saw last week, where the index remains into a tight 200-point range plus minus 24,000 mark.
Kunal, given the IBM casualty last night and the tech ADRs, the India ADRs as well have seen quite a bit of fall overnight, does it seem that yesterday's weakness into IT will persist and today too you will see selling in that sector?
See, Aisha, I think what we've seen as a pattern over the last 10 days is one strong day of candlestick up move for IT stocks, followed by 2 successive days of price correction. This has been the third consecutive pattern which we've seen. So, the move started off from 26,000 for the Nifty IT index. There was a 3.5% move for the IT stocks, then followed by 2 subsequent moves, 2 consecutive days where the IT stocks corrected. There was a marginal kind of a drop or a retracement, or profit booking as we may call. And then followed by, again, a very strong uptick where the IT index made a new high on a swing basis, of course, and then followed by, again, 2 downticks. So, when we look at this as a particular pattern, then 2 days back, we had a very strong uptick on the IT index. We were up some 3.5-4% approximately on the IT index. We managed to retest 29,000 mark. But I think now we are looking at a retracement of sorts. I would sense we should probably come back towards 27,600, 28,000 range for the IT index before we manage to see a comeback of sorts.
Okay, and what's your stock bias like? What would you recommend?
So there are 2 interesting names which have come back on the radar in terms of breakout. SBI Card, I think after weeks of downtrend, the stock has managed to come back into a strong breakout mode, formed a double bottom, RSI divergence for the stock on the daily charts. And on the weekly charts, we are seeing a stochastic turnaround for SBI Card. So a lot of positives for the stock price on the daily, weekly time frame. Would look at this as a trending stock going forward. Initial targets of 666, stoppers to be kept at 610. The second would be a band Blue Star. I think many of the stocks in the same space, Blue Star, Voltas, etc., they are going through a strong breakout. There's a trendline breakout, a falling resistance trendline breakout for this name, indicators being very strong, and prices confirming a swing up move. So we'll look at Blue Star as a buy, targets of 1810, stoppers at 1715.
Kunal, what we have seen is a lot of long unwinding happening for Nifty Bank and Nifty Bank stocks in the last 2 days. We are going into this week with big Nifty Bank earnings, like you have ICICI Bank, SGC Bank, Kotak is there, and then there are a host of PSU banks which are coming in. How do you play the Nifty Bank?
See, I think after yesterday's and last 2-3 days of move, there is one thing which is certain, that we are not looking at any kind of a major breakout in the banking index immediately. But then the sector composition within the banks is improving. We were so much heavily dependent on private sector banking names for the last, I think, 1.5 or 2 months or so. Now the PSU banking stocks are trying to make a comeback. We saw, Indian Bank making a comeback. Union Bank, I think, for the last 3 days has seen almost like a 10% up move from its swing lows. So many of the PSU banking names are making a comeback. I would sense that the drop in the open interest is more like a juggle or a rotation within the sector. It could probably be that the leaders or the ones which have performed very well in the last 2-3 months, they could take a bit of a off period for themselves, consolidate, just about try and digest the gains which they've achieved. For example, HDFC Bank has rallied up 100 points from its previous close of 730 to 840. ICICI Bank has rallied up 15%, Axis Bank, and so on and so forth. So I think many of these stocks have run up quite well. Maybe I think the markets are now looking at trying to find stocks which have been underperformers and then trying to play up a catch up over there. So I would sense it's more like a juggle which is happening within the banking index.
Okay.